The IRS knows how much you sold online. We don't want them to come knocking on your door. So let's talk about what we should do with those 1099Ks that you receive. I'm Johnny Petrucco, an IRS enrolled agent, and if you made more than $5,000 in sales in 2024, the IRS knows about that. And depending on your state, you would have received 1099K for less than $5,000. The reporting threshold goes to $2,500 in 2025 and $600 in 2026. Third-party settlement organizations, which are payment processors basically, such as eBay, PayPal, Stripe, are sending you these forms. So on Whatnot, for example, you can pull your money from PayPal or Stripe, and that respective payment processor will send you a 1099 if you sold more than $5,000 in 2024. Same with eBay, right? But usually this is going to be sent through email. So make sure you check your email or go onto your website, because if you definitely sold more than 5,000 and you're not reporting it, they're waiting for you to do that. So that's going to cause some real issues. Of course, technically, if you sold $1, whether online or in person with a cash sale, we're supposed to report that, but at least the IRS only knows about 5,000 or more for 2024, 2,500 in 2025, and so on. So let's say you have $50,000 in 1099K income. Do not pay taxes on that full amount of income. You need to find deductions, but it depends. If you're a business, you get a lot more deductions than if you're a hobby. And you can check out that video that I made on hobby versus business. So first, let's assume you're a business. If you're an S corporation, then you've already hopefully filed your business tax return March 15th. If you are a sole proprietor or single member LLC filing as a sole proprietor, then you're doing a Schedule C on your 1040 tax return. Make sure your sales on the Schedule C matches exactly what you have received for 1099Ks. Now, there will be discrepancies between your actual sales and what's reported on a 1099K. Oftentimes, for some reason, these processors add sales tax, and that is a liability, not an income or an expense. The workaround here is just put the total amount that's on the 1099K, and in the taxes and licenses section, you can put what your sales tax was. You also might have personal belongings included in your 1099K that were sold at a loss. But there's another way to go about doing this, and that'll be on Schedule 1, and there's a kind of other income and other expenses, but your tax preparer hopefully will know what to do with that. And also, refunds are not always listed on the 1099K. So you want to make your gross sales equal to what's on the 1099K, and then there's a spot for refunds in your Schedule C, and now you have all of your deductions. So cost of goods, that's going to be the biggest one, and you can add supplies, your travel, your rent, all kinds of things. Schedule C is the best. Look at my other video for more detail on that. But if you're not operating as a business, you need to report that 1099 income on Schedule D. Now, this is for those that do this as a hobby, or more technically speaking, as an investor. Schedule D is the capital gains and losses. And because we are in the collectibles world, this is considered a capital asset. Capital assets like stocks are treated differently than your ordinary income from a W-2 salary. There are better tax benefits for stocks. You're taxed at either 0%, depending on your income, 15%, and up to 20%, or even more. There's an additional 3.8% if you make a lot more. And collectibles fall under a capital asset category, and you can look on the IRS forms, there's a line for it, and there's a scary percentage that's shown, 28% collectibles tax. I'm going to need to make a full video explaining this, but basically, most people would not pay a 28%. That's going to be the maximum that you pay. Okay, if your marginal tax rate is above 28%, then you're going to be capped at 28%. But if you're in the 22nd percentile, you won't be paying that amount. But nevertheless, you do need to report that 1099 income on Schedule D as a capital asset, and you can write off your cost of goods. That's going to be your cost basis, just like you would in the stock. You buy a stock at a cost, and then you sell it. And the profit, the difference, is your capital gain. There's some other things you can include, but like travel, supplies, those things you can't. But if you authenticate through JSA, there's some other things that if you enhance your cost of goods, that can be included in the cost basis. Nevertheless, you have 1099 income. That needs to go on Schedule C as a business or Schedule D as a hobby, collector, investor. Reach out, as always. Happy to answer any questions. Feel free to book something on my calendar or ask a question on this video. Please like, and I have more videos, ideas coming. But thanks for watching. And at Sports Card Tax Guy, we help our clients trade their IRS stress for financial success. Talk soon.